Hello everyone, welcome to the CPA PEP Core 2 exam review. We're just doing some final last minute adjustments here before we start the presentation for today. Just before we get started, can anyone let me know, are you able to see the presentation? Can you hear everything fine? Let me know just by communicating with me through the live chat. If you are able to see and if you can hear, please let me know and we'll begin the presentation for today. So feel free to also say hello directly through the live chat, which is typically on the right side of your page. If you're able to hear the presentation, kindly let me know, and we'll get the ball rolling from here. Welcome to all of you that have attended to some of my previous webinars. I can clearly see that there's a lot of familiar people here in the room, which is wonderful. So thank you for taking the time out of your busy schedules right before the exam to come and attend this Core 2 presentation. Okay, perfect. So it does look like everyone is present and everyone is here. And it looks like everyone's able to see. So I'd like to get started. This is a pretty busy session, okay? So definitely I think it's... it's going to be a pretty busy day. Now, how is everyone feeling for the exam? Are you prepared? Are you not? Do you think, you're comfortable? And do you think, are you, ready? Or is this a moment where you're kind of freaking out and looking for some last minute adjustments to your process? Okay, so let me know. Actually, hang on a sec. For anyone that can't hear, please use Chrome or try to refresh, okay? So for anyone that can't hear me, please refresh. You'll come right back here. I promise you're not going to disappear. You'll come right back to the exact same presentation. So just kindly, let me know if you can refresh. Just want to make sure that people are able to see and hear everything before we get started here. Just going to do a quick check. Okay. All right. Okay, perfect. There we go. So some people had some audio issues right now. So why don't we get rolling? Okay, so this is a technical review. I've also posted a case that I think all of you should try going forward. I think it's really critical for all of you to try this. I think it's incredibly important for you to try the case that I have provided as part of this webinar. Okay, so if you're writing the Core 2 exam soon, I highly recommend for you to at least try that portion. Okay, I think that's going to be really, really interesting. Now, did all of you get a chance to download this slide deck as well? Did all of you get a chance? Let me know if you're able to download. Kindly let me know through the live chat. I'll just wait for a few seconds. Yeah, please let me know if you're able to download this PDF that I'm working off. Okay, let me know if you didn't see anything. Chances are you probably logged in earlier. So if you actually click back, you can see the webinar materials. I've posted a new folder with webinar materials, and you should be able to access everything there. Okay, so feel free to just quickly go back, download the PDF. So yeah, go back. Okay, again, so go back into the previous, course page, like not where it says live webinar where you've clicked to see me. So literally click back and then you'll see webinar materials and you'll be able to just download it right there. Okay. So we're going to cover the PDF. We're not going to cover the case. I actually want you to write the case. Okay. Check out the case. I think you should be able to do a case like this. To me, it's the most representative case possible under Core 2. Okay. So in my opinion, I think you should be trying that case. That mock exam case is the most representative, in my opinion, of the Core 2 exam. So I hope you take the time over the next few days just to try to write that case and debrief it on your own time. I have provided with the solution as well for your records. Okay. Oh, sorry. I think we just lost the connection here. Okay. All right. Okay. So why don't we get the ball rolling here? Oh, hello. Hi. Sorry. We keep having some audio issues today. It looks like some people are able to hear me, and then periodically it's cutting out for some people. Let me know if this continues to be a problem, and I'll get one of our IT staff to take a look. But at this point, we should begin. So really, this session is for you, okay? This session is a walkthrough of all the Core 2 materials that you're technically responsible for. I'm your session leader for today. This is Mike Katzelman. I'm the course director at PEP Formula. In the past, I've been a comprehensive marker for CPA Canada. I have had quite a bit of experience teaching, being a marker, being a teacher, etc. And my role today is to talk about some best practices and talk about really what you're expected to basically do as part of the exam and what are the common areas behind it, okay? So also, why PEP Formula? We provide a supplementary training program for students going through CPA PEP. I'll kind of skip through all of this, but basically we've been the largest and most trusted CPA program Canada-wide based on site traffic, and I do appreciate you coming out. Also, a quick disclaimer, the standards belong to CPA Canada and other provincial bodies. The interpretations below are my own opinion, and all rates are reserved. The information provided is for illustrative purposes, and PEP Formula is not affiliated or related to CPA Canada or other provincial bodies. Okay? Perfect. So again, welcome to the Core 2 review. I really do appreciate all of you attending. If this is your first webinar with me, welcome. I hope to be able to cover a few things. So first, we'll talk about some exam-specific questions. The session is 2 hours. Someone's asking me how long this session is. Most of my sessions are 2 hours, unless it's some sort of a special gig that we're doing with another educator. But most of my sessions are 2 hours. So let's talk about the Core 2 exam. It should be very simple. How do you do well on multiple choice? Well, it's very similar to your Core 1 exam. And again, this shouldn't really come as a surprise, but the best way to do well on multiple choice is to practice. It's to simulate doing the same multiple choice questions. Now, does everyone else feel that way? What is your strategy for multiple choice? I'm curious to kind of get your sense on it. But in my experience, multiple choice is something that's kind of a necessary evil, and you just have to do as many questions as possible, and just to really knock it out of the park. Okay, so it's all about just doing many, 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 many questions. Okay, and we have tons for you to check out on our platform. Okay, our quizzes will automatically keep track of your time, so you don't have to do anything. Okay, what I like about them is as soon as you start the quiz, then we keep track of everything and we can see how long you spend. So at a later point, in the event of something going wrong, you can go back and you can try to come back to it and see kind of what happens there. Okay, if in the next 48 hours, if you have the opportunity, try to do as much as you can to simulate one or two quizzes, okay? I think it would be really helpful for you to do this. I think that would be something that I think would help you the most going forward, okay? So try to, try to basically do this whenever possible, okay? Again, so some people are struggling with, it's the same people that, refresh your screens. So I'm really sorry, but I can't keep stopping the presentation. So this is the last message from me. Okay, please refresh your screen. You have to refresh. If you don't refresh, then you won't be able to hear. Or you have to try a different browser. So for anyone else that's a part of the presentation, if you want to kindly help me out, just kind of moderating questions, and if you see anything that you think you can help, please feel free to connect, okay? It would be really beneficial, and it would save me a bunch of time so I don't have to stop constantly. Okay, I would greatly appreciate your help here. Okay, a few other things. Now, under CPA PEP, one of the key things here is answers may seem like they're right until they don't. What's really critical here is CPA Canada will actually try to methodically calculate answers that that seem familiar. So just be careful, because your B and your C might be something that actually might work out to be correct as part of a calculation, but then it actually won't be correct as part of an answer. Okay, so they'll methodically plant traps, in my experience. So just be careful to make sure that you first isolate whichever questions it might be. If you see an answer that fits, don't ignore the other answers. Okay, so don't skip ahead and say, oh, okay, I know what it is. It's A based on the first amount. Read every one of the suggested numbers. Okay, it's intentionally set up in such a way to really kind of throw things off for you. So try to make sure that you don't fall behind. Also, I'm not sure if you've done this as part of your university kind of career days, but back in when I was a student, and I don't want to date myself again. I'm old, but back when I was a student, some of my professors would troll us, and they'd provide like an exam that had like all A's. Okay, there's no such thing here. Okay, so don't keep track of patterns. There will be no patterns whatsoever. You're dealing with a regulatory body. There's no patterns whatsoever. So for anyone that's trying to like go after, C is kind of the best answer, and there's probably going to be more C's than anything else on the exam. No, generally speaking, in my experience, it's all proportionally weighted. So there's no best answer. You strictly just have to try to assess and bring things down to like 2 different individual subtopic answers, and then you try to attempt. Okay, focus on the best answers possible, not necessarily the ones that seem right. Okay, I'm getting another question here. Oh, there we go. Yeah, so it was just answered. Great. Someone's asking me how many multiple choice questions will be on the exam. So the answer here was 75 questions. It doesn't have to be 75. It could be up and down. It's really dependent each year. They do have the option to actually completely modify the exam based on the design of the curriculum. So there is an opportunity for it to be anywhere from 50 all the way up to 100, depending on the complexity. Now, please note also in the future when you are at a Core 2, and by the way, there is a light at the end of the tunnel. I've been doing this for many, many years, and many thousand people have passed working with me. So you'll definitely make it through. But eventually when you make it to the electives, there is a multiple choice component in there. And on some of the previous elective exams, what they've done is that they've actually completely eliminated the multiple choice, even though technically speaking, D2L will say that there's multiple choice. So my point is, don't rely necessarily on what D2L says. Go by what's kind of the average. And the average has always been anywhere from 50 to about 100 multiple choice, depending on, the time and kind of the approximate, time of testing, I guess, based on what you need to know. So what are you supposed to do? What are you not supposed to do? My recommendation is don't study until the very last minute, okay? Also, don't contemplate life choices. Sorry, this is supposed to say life, not live. If things don't go well, it's really not the end of the world. Don't think about it like that. You will do perfectly fine. You've done a lot of work to get to this stage, and all you need to do at this point is just to treat it as a practice test. One of the key things that I want to really explain to you is you should read each question very slowly. A lot of people rush through the question itself and then immediately jump into the answers. Please note that interpreting the actual question body itself is way more important than just strictly reading the ABCDs. You will never pass if you're just looking at the ABCDs. As I mentioned previously, the CPA Canada intentionally tries to trick you to set up answers that sound familiar or that might sound reasonable depending on some sort of an incorrect answer. Okay, I was going to say illegal, but sorry, I really meant to say incorrect answer. Okay, so just try to keep your eye out for something like this. If you have a few extra seconds, read the question very slowly. Understand what's being asked of you. Okay, and last but not least, this is kind of strange, and I always want you to get into this mindset. This is also something that I've been taught all along, okay, and this is really what I want to share with you, is remind yourself which competency area you're working with, okay? I can't tell you how much this helped me. When you're doing multiple choice questions back to back to back, you might read a question, and it might not be as directed as you want it to be. You might not quite understand what it is. You might not have any clue what you're even reading. You'll say, I haven't seen anything like this before. I don't really understand what some of this complex stuff is. What am I really doing here? So first of all, pull back and say, which competency area am I working with here? Is this a finance discussion? Is this a management accounting question? Is this a financial reporting discussion, right? Figure out, first of all, and decide, what are you actually looking at? What specifically are you trying to focus on? And once you do this, then you'll have a much better opportunity, a much stronger attempt going forward. Okay, a few other things. How do you start? And I promise we're going to get to the actual material shortly. But here's the one thing that I want to explain to you. Technically, this is a 4-hour exam. Many of you might do the multiple choice first. I recommend for you to do the case first. I think it's really important for you to at least try to do the case first. The way that you want to do this is you want to allocate a little bit more extra time to your case. Now, we budget approximately 10 to 15 minutes. In my opinion, you can go up to 90 minutes total, so 30 extra minutes on this case. So if you have to run out of time, you're much better off running out of time on multiple choice. By the way, let me just rewind. Please don't run out of time, okay? I'm not suggesting for you to run out of time. I'm not encouraging you to run out of time. Don't run out of time. But if you're down to the wire and things don't really go as planned, run out of time on the multiple choice, okay? Never leave your questions blank, and never run out of time on the case, because that almost guarantees that you fail the exam. Okay? Also, last but not least, consider the weight of the exam. 50 to 70% of this exam coming up will be allocated to management accounting, right? So what that really means is that you have to really tie in everything to management accounting or finance. But the question is, where does strategy and financial reporting come into play here, right? So far, you've been looking at doing immersive cases if you're part of the module, or you've been looking at a bunch of random information that was all neatly packaged, I would describe. I think the module is very neatly packaged. They very clearly tell you what subject you're working on. There's a very nice little guide that teaches you how to write your immersive cases, and you're not going to get any of that. All you will have is 4 hours and a question paper, and you somehow have to figure it out. So what I'm trying to teach you is more of a life skill on what to do from an exam context, and that's really my role today. Okay, my role is to help you pass the exam. My role is not to teach you to be a better accountant. It's strictly to have the right skills necessary for you to pass the exam. All right, so here's kind of what I want to focus on today. As part of case writing, what I want you to do is apply the Rodak method. For any of you that don't quite know what I mean by this, check out my previous webinars. Okay, there's lots of really good information that cover case writing, and I think it would be really good for you just to even attempt to do this. Okay, the Rodak method in my mind is set up like this. You read the case, okay? You want to read it front to back. Okay, I don't like the idea of kind of dividing things and maybe not reading everything front to back. Some people kind of have their own, methods where they skip to the last exhibit and they go back and forth and they do all sorts of weird stuff with their case. Honestly, the case is meant to be read front to back. You should read it front to back. Take it from a guy who's literally marked probably thousands cases in my lifetime and have written hundreds, if not, hundreds of cases that I've personally written. I highly recommend for you to just read the case front to back. It's way more organized. You won't have to go back. And if you're methodical enough, and if you check out my other webinars on how to write cases, if you're methodical enough, you won't really need to actually go back to anything. Okay? Which brings me to my next point. Organize using an outline. It's really critical to use an outline. I highly recommend the computer outline approach, which we call Rodak. Okay, the computer outline, by the way, is not the same product as a paper outline. Some people really swear by the paper. I think paper is a complete waste of time. I guarantee you that if you're a strong paper writer and if you try it my way using a computer, I'll save you 5 minutes. So try using some sort of an organized way of putting down information. And even if this is going to be your first case, the one that I've just uploaded, the mock exam, try to at least write down information in a methodical way on the actual Core 2 mock exam question that I've uploaded using this format going forward, and see how you do, see how you like it. Next, as part of an outline, what you're supposed to really do is divide things into competency area topics. So first of all, ask yourself, is this paragraph applicable to management accounting? Is it applicable to finance? Is it strategy? Which one is it? And once I figure it out, then I apply the preferred format, and then I conclude, okay? You'll notice that there's a conclusion part. Many of you might read a case and, address the requireds, address the assessment opportunities, but will not actually conclude on the big picture topic. Now, keep in mind that each case, okay, most cases, let me say 80% of cases will have a big picture for you to talk about. What does a big picture mean? It's the overall application of the role itself. Okay, it's the overall application of the role. Now, what do I mean by this? Basically, I want you to have a final conclusion at the bottom of each section that will summarize your role, your responsibilities, and potentially your user's problem and how you would fix it. So, so in other words, it's kind of like, okay, client, after I addressed all of the problems that you've asked me to look at, I'm still finding the following big picture problems. For example, they could be issues with, continuity of this business. They could be issues with really anything, and then you'd summarize it that way. Now, I'm getting a quick question here: is a case worth more than the multiple choice? It's not. But keep in mind, the case only has 1 hour allocated to it. Right? So in general, it's marked separately. It's almost like writing 2 exams, by the way, at the same time. It's 2 exams at the same time. So think of it from this context, that you get marks based on the case portion and based on the multiple choice. If you skip a large chunk of the case portion, then you'll get a 0 on one entire section of the exam, which means that you are extremely likely to fail. Okay, so unfortunately, that's not going to be an issue. So anyway, what I mean to say is basically the case is not worth more, but it's worth a lot. And it's not that it's actually worth only 25% of the overall mark. It's worth a lot more because it's a major section. Lisa, is it possible to get a sample outline for this mock case? Lisa, sure. Why don't you follow up with me by email after? Here's my email address. Feel free to just shoot me a quick email after, and I'd be happy to send you a sample answer for this case. Or I might actually upload it directly on the platform after. But I'm happy to provide this to you. All I ask is for you to first try to attempt to do it yourself. Okay, that's really all, like all I ask of you here. I think that you should at least try to do it yourself, just so you kind of get a feel for it. Okay. Now, I'm just going to quickly skim this. I'm noticing that we're spending a lot of time on how to do cases. Now, I don't mean to say that I don't really want to cover this, but at the same time, I want to cover the actual technical. Okay, so what you'll notice is, I describe more about the R. I talk about the O a lot, the organization, the outlining, the paper versus the computer. I talk about the division, right? So looking for specific competency areas. I put kind of a lot of different stuff here just to keep things kind of organized for you. Someone finance on how you would score marks better with finance. But many of you may have seen this before. One of the key things that I really want to look at here, and you'll notice that I'll cover a lot on governance as part of this webinar, because governance plays a huge factor. And I think there's this overwhelming thought that people believe that strategy and governance are is common sense and I don't need to study it. I would say that that's like the common theme that I hear from students, and that's wrong. And I'll explain that in a second once we actually get to that section. I promise I'm going to make it as easy as possible on you, but I really do encourage you to check out these slides as well. Okay. So what do we actually get right into the technical before we actually jump into, there's a bunch of formats for you to adjust here, right? And again, please check out some, the case writing webinar if you want more information. I mean, I'd be happy to talk more about it, but basically here's the enabling, here's, everything that we just talked about. Okay. Some people are asking me, please upload it onto the platform. Okay. So what I'm going to do is at the end of this webinar, I will upload a few sample answers, which will be kind of like using the format that I want you to write in after I finish this webinar. So you'll have a few examples of realistic responses, along with some outlines, possibly if I find them, on how to approach this case that I just basically set up for you. So my suggestion for you in general here is try to make sure that you are kind of following along here, and try to make sure that you have access to it in general. Okay, I think that would be the most important thing for you here, as a way of getting ahead. Okay, any questions about case writing before we move forward? Any questions at all? Any questions at all before we move forward here? No questions about case writing? Okay, I just want to make sure that before we move on to onto the technical review, that there's no additional questions. Everyone's generally comfortable. Okay, perfect. So I'm not noticing any questions. So basically what we should be doing now is we'll go through like a quick technical review. Okay, I'm going to cover all 4 sections: management accounting, finance, strategy and governance, and a little bit about financial reporting. Not really a ton, but you'll notice that I'll cover the sections that I think are really critical here. What do you need to get out of this review? What's my goal with showing this? My goal is not to teach you these subjects. My goal is strictly to refresh your thinking. If you see anything across this review that you don't know, and if you come across this and say, wow, I have no idea how to do any of this, please feel free to get in touch with me, or feel free to check out the platform, or feel free to check out all of our resources, from the notes to the videos to the practice multiple choice to the cases, and try to review the subjects that you're not comfortable with. It's my opinion, based on everything that's in this presentation, that you should know every single one of these subjects. And if you feel like you're kind of rusty, this is the point for you to say to yourself, okay, I need to review, I need to go back, and I want to spend the rest of tomorrow, for example, trying to take a look at this and trying to get a little bit better at the areas that you don't kind of know. If you had a chance to actually print the PDF earlier, what you might want to do is kind of just maybe highlight the areas that you're uncomfortable with, that you'd want to review going forward. All right, so with that, let's cover a few topics that I think A, you should know, B, have been tested a lot, and C, would be extremely helpful for future modules. Topic number 1 is cost management. So first of all, cost management is the process of planning and controlling the budget of any kind of business. When you're, really the whole idea is when you're applying it to a project, expected costs are calculated while the project is still in the planning period and then approved beforehand. So cost management implies that you set up a really good plan in hopes of possibly, achieving those planned costs going forward. During the project, all exercises, all expenses are recorded and monitored to make sure that they stay in line with the cost management plan. And after the project is finished, the predicted costs and actual costs can be compared and analyzed to help future cost management predictions and budgets. I think that's kind of really important, and that's sort of the whole idea behind it. What's the purpose of it? A, to present the cost estimates for the project. B, to identify factors that will tend to increase the costs. And C, to describe procedures that will be used to compare this. Okay, so really, where am I going with cost management? Cost management is a management tool, right? It's a way to keep track of your budget. We do this, generally speaking, by looking at cost classifications. So classifications basically are arrangements of items and costs in logical groups based on their nature. Now, when we say nature, we're not working with any kind of a technical guidance book. Like, there's no CPA Canada standards on management accounting. I mean, it doesn't really exist, right? So because of that, it's sort of subjective if you're looking at it from the nature of operation. However, you could get to an objective classification if you're looking at the purpose and then kind of grouping it that way. Okay? The scheme of classification should be such that every item of cost can be quantified and classified. Okay? So you have to be able to measure every single activity. You have to be able to measure and kind of go through every single part of the discussion going forward. Here's a really interesting, example of kind of what you need to know. I kind of pulled this just to show you and provide you with a walkthrough. By nature, in this type, management, labor, and overhead are the three costs, which are further subdivided into raw materials, consumables, packing materials, and spare parts. So what we essentially do is we look at manufacturing costs and we look at non-manufacturing costs, right? So manufacturing costs is something that's directly attributable to the actual manufacturing process, and non-manufacturing costs, often called period costs, are there irrespective of any kind of an operational expense going forward, okay? So is also known as like your fixed versus variable in a nutshell. Often you should be able to trace the cost classifications by nature and traceability. So the way that you would do this is by looking at the direct expenses that may be attributable to a particular product. Okay, so for example, leather in a shoe manufacturing would be a direct expense, right? And the indirect expenses could be basically like salaries or rent or something along those lines, okay? So that would be a very easy way of kind of describing this. Okay, let me actually go back here. There's a quick question here. So someone's asking, what is a conversion cost? So conversion costs basically are a combination of direct labor costs plus your manufacturing overhead. Okay, so what you do is you basically take together direct labor, add manufacturing overhead that's attributable, and that's your conversion cost. So by conversion, you mean that you take materials and you convert them into the product. Okay, that's kind of what it is. And prime cost, by the way, would be direct materials and direct labor, but no real overhead. Okay, it's really just a definition. It's more of a term. And by the way, there is another quick question here from Jipeng, who asks, what is the passing rate for Core 2? Do you know? The Core 2 passing rate in the past has only been published once. And all I'm going to say is it was heavily skewed towards first-time writers. And the official rate is anywhere about 80%, which was the number that was actually released. In practice, considering that we're dealing with a situation where it was skewed towards first-time writers, I don't necessarily believe that it's that high. And in my experience, it's never really been that high. So I would estimate the pass rate to be in the 60s and in roughly the 60% range. I hope that helps. Okay, all right. So again, I just want to kind of quickly show you that the fixed cost per unit of fixed costs of, say, renting a building would be significantly lower if you're to rent over time, right? So, for example, if you're renting a specific premise, right, it would be a fixed cost, but you can still try to trace it directly to, say, the number of guests, which would be variable in nature. So, in my experience, you have to be able to apply and direct certain costs and to keep track of all of this information, but you want to do it based on a like an effort where you would calculate basically some of the fixed costs and extrapolate it over a total number of units as part of your budget. Now, variable costs is dependent on the number of variable or for example, units of production. In my experience, the variable cost would be the same irrespective of the number of guests that you're working with. So the variable cost behavior is not something which you can very easily reduce as the quantity goes up. So think of it from a different context. I'm pretty sure I didn't tell you anything that you didn't really know, but think of it from a risk context. If someone asks you, is it less risky to manufacture more? If someone asks you this question, is it less risky to manufacture more product? You might, for a second, want to say, well, economies of scale means something good, right? Means that it would be less risky to manufacture more product. But what you're implying is something like this. What you're implying is from a fixed cost perspective, it's less risky because your fixed costs are set. So they would decrease. So hence lower risk. But your variable costs would remain the same. So the cost of delivery for each individual unit cost, right? The cost of actually servicing the client based on a variable context and based on a variable type of angle would still be the same, irrespective, in most cases, by the way. You could, by the way, have variable changing cost, which would complicate the situation more. But I don't really want to complicate anything in life. Really, the key thing that you kind of just have to watch out for is make sure that you are always calculating your fixed and your variable costs. There's a few other costs which you should know about. The first one is sunk costs. And these costs are basically created by a decision made in the past and that can't be changed. Okay, so as an accountant, you should be thinking about sunk costs everywhere in your life. Can someone give me an example of a sunk cost in your everyday life? Forget about, I'm going to talk about like investments in plant and equipment. And, it's basically, let's say that you paid $1 million to buy a piece of machinery. That's a sunk cost. If someone comes to you and says, I want to order 500 units of your product, you're not going to say, well, last year I bought this machine for $1 million. So, they're going to say to you, like, I don't want to know. I don't care. It doesn't influence my decision. Should influence yours, right? It's irrelevant for decision making. Okay, well, so here's a few examples of what people are saying that would be a sunk cost. So, someone is saying purchasing a car. It depends on what you're using it for. So Adarsh says purchasing a car as an example. I would say certainly it's a possibility that you would get some utility. And there's actually a lot of other ideas here. But I would say, yeah, it could be used as, a measure of a sunk cost. Someone provides a really good example here. My engagement ring. Oh, wow. Don't tell my wife. Yes, it could be a sunk cost. I mean, this is an interesting way of looking at it. Okay. And then Adarsh further clarifies, if you want to buy a new one, then the purchase car you have is a sunk cost. Um, okay. Yeah. Yeah. This is great. Someone else is also saying R&D. R&D is a sunk cost. And this is a very interesting example because I'm not sure that R&D by itself would be a sunk cost. And you would need more information about the nature of R&D to decide on whether you truly believe that it is a sunk cost or not. In my experience, you could have a situation where R&D is not a sunk cost. Okay, for example, specifically development doesn't have to be, right? So, think of the development angle. Development by itself doesn't have to be a sunk cost because technically it's based on your decision making, right? Whereas research, before you actually attempt to develop something, before you commit to developing something, you wouldn't necessarily have a problem with that. Olivia provides an example, continuing to pay for a movie. Continue to watch a movie that you don't like. Yes, agreed. Some people are saying that they were unable to hear the first 20 minutes. Yeah, everything is always recorded, so you can always go back and watch a recording of this at any point in time. We do record everything automatically and put it right on the server. Okay. Okay, I'm noticing that there's another comment here before. Actually, so this is an interesting point. So someone called it insurance. They said insurance is a sunk cost. Yeah, possibly. So I think one of the most let me just say this. I think one of the most important things about costs and definition of costs is some things are extremely obvious. So sometimes it's very obvious to decide what is a variable cost and what is a fixed cost, right? So I think we can all make the determination of what is variable and what is fixed. I think everyone can make that decision, right? So everyone can decide, is this a fixed cost or is it a variable cost? And I think things like sunk costs, and by the way, we haven't covered opportunity, but many of you may know opportunity costs. It's the cost of an alternative that must be foregone. Okay, so the benefits that you could have received. By the way, opportunity cost can also include revenue. So one of the tricky things behind opportunity costs is that it could also include revenue from another income source that you could have had before. So for example, if the warehouse was used for a business or its lease, so you could be foregoing the lease, revenue, for example. So back to my example, like things like variable costs and fixed costs are pretty set in nature. It's pretty easy to identify what they are. And it's extremely simple to say to yourself, yes, this is a fixed cost, this is a variable cost, right? Based on the nature. Now, with sunk costs and opportunity costs under cost classifications, we require additional information to make that decision. So what you consider to be a sunk cost may not necessarily be a sunk cost for all other projects, right? And another person might not consider it an opportunity cost. So it's very subjective, first of all. Second of all, it's highly dependent on the information provided, on the context. Okay, great. Okay, so when we're trying to measure costs, we're trying to look at hopefully some sort of method of keeping things sane. And there's a number of different ways for you to do this. The first one is absorption costing, where it's the practice of charging all costs, both variable and fixed, to operations, processes, or products. And this differs from marginal costing, where all fixed costs are excluded. Now, I'm going to ask an accounting question. Well, this is an accounting session, so I hope all of you know the answer to this. And if you don't, you should. So is absorption costing or is marginal costing is either one allowed under ASPE or IFRS? So what is a financial reporting way of recognizing costs? So let me say it in a different way. What is the default from a case perspective? Let's say you have a client who's currently a financial reporting type operator recording within financial like FR standards, like IFRS, for example. What would be the default? How would they be recording all of their operational discussions? Is marginal costing allowed? Is absorption costing allowed? Which method do you believe would apply here? And the reason why I ask this question is often you might actually get a case and you might kind of deal with a situation where you first have to deal with some accounting issues, and then you use the information after you've adjusted for the accounting discussion to then import that into a quant. Has anyone ever seen that before? Right? You first do the accounting adjustments, and then we take those accounting adjustments and then we move it over. Okay, so someone is saying neither. Period costing. Okay. So is period costing allowed under IFRS? Is absorption costing allowed under IFRS? Now, see, this is very interesting because some people are saying absorption costing is not allowed. Okay. So think of something like, say, the cost of inventory. And I asked a pretty tricky question. Okay. Okay, so someone is saying absorption costing can be used internally but not externally. So my follow-up question for you is, in your experience, how would you account for something that would have a portion of the cost that's fixed in nature? How would you account for that? How would you account for something that that would have a portion of your costs set up? So Michelle is saying absorption costing is only for production, not operations. Yeah. So actually, there we go. Sean is answering the question. So, so yes. So absorption costing is allowed, by the way. All we mean by absorption costing is we set up both variable and fixed to operations. And think of absorption costing as just being the normal way to record something, right? Like, for example, when we're accounting for inventory, right? Our inventory standards tell us that we are allowed to include any costs, right? So think of your basic inventory standard. We are allowed to include any cost that is associated with bringing the inventory, or constructing it, or building it, and making it ready for sale. But by looking at that kind of assumption of bringing it to be, ready for use and ready for sale, we assume that we're going to include both variable and fixed costs, right? So absorption costing is allowed under IFRS. Now, the tricky thing here is, in my opinion, marginal costing, which, by the way, is a term that's not defined by the standards, right? So the standards don't actually define marginal costing, but marginal costing by itself would be a different practice from your inventory standards. So inventory basically tells you that you're supposed to include all sorts of costs that are necessary. And here we're being told that marginal costing, which is okay, by the way, under management accounting for your decision-making process, and say for a decision on whether you want to take on a client or not, is not allowed, right? So here we're saying that fixed costs would be excluded. Okay, great. Yeah, so I think it just kind of depends on what you really want to cover, basically. So someone is saying, so a lab, but not as reliable as other methods. You always want to look at what the user's needs are. Okay, so Adarsh, you always want to look at the user needs and to make a decision on what your client is looking for. Okay, and actually Gigi says, I believe absorption costing is required for external reporting, and marginal costing can be only used for internal. Yes, so they can, by the way, be both used for internal purposes as well. Absorption costing, in my opinion, reflects the nature of the costs associated with the asset more and better. Okay. Abdul, Mike, is variable. Is variable and fixed selling or marketing costs also included in absorption costing, or excluded and only variable overhead and fixed overhead included? So is variable or fixed selling or marketing costs also included in absorption costing? Now, Abdul, you would have to make a decision on whether you believe that, the selling or marketing costs are directly attributable or not. So what you haven't told me so far, Abdul, is whether it is directly attributable to selling that individual product or not. Right? So for example, here, and let me give you an example here, Abdul. If you have 5 products and 1 sales team, then how would you say that there is an allocation available between selling and marketing costs if you have 5 products and 1 sales team? Right? Then it would be very difficult for you to directly attribute. However, if you have 1 person selling 1 product, then isn't that by definition something that should be included as part of your absorption costing? Isn't that something that by definition is it's a fixed cost, but it's directly attributable? Right? So I think what a lot of people are kind of mixing here is the concept and the main difference between fixed and variable, and then directly attributable and non-directly attributable, which is kind of a separate parallel set of definitions. I hope that makes sense. Whew, that was a big slide. Okay, activity-based costing. Activity-based costing is a costing method that identifies activities in an organization and assigns the cost of each activity with the resources to all products and services according to the actual consumption by each. Okay, ABC is something that's very preferred, I think. ABC is something that you would want to suggest for an organization to keep track of and to make a decision based off of. Okay, and that's something that you really want to kind of think about. So this is more of a solution, assuming that you have enough data to work with. A few other things, other terms, marginal costing. Okay, it's a differentiation between fixed and variable. It's used to describe changes in volume, right, or changes to the type of output or profit. Also, standard costing is typically a comparison of actual costs with prearranged standard costs and the cost of any deviation analyzed by causes. So I think that that's really critical. And this permits management to investigate reasons for variances and to take suitable corrective action. So this kind of helps them. Okay. I see that there's one other question here before we move on. I'm going to cover it quickly and then we'll kind of continue here. So in a multiple choice question, this would need to be determined if the cost is attributable or not. And the question is, you need more information about the type of resources that you're working with. Okay, always look at the substance compared to the form. I think that's really important. Like, what is a substance? What is a nature specifically? Okay. Okay. Topic 2. Okay. I mean, I'm going to move on. I don't see any, I don't see any other comments here. So I'm just going to move on and see if there's any, if there's any additional questions here so far, but otherwise we'll just continue rolling. Okay. So if it's okay with you, we'll keep going here. Okay, perfect. So the next topic that we're going to cover is planning, budgeting, and forecasting. This is probably something that's a little bit more useful compared to costing, and something that appears more from a case context. Okay, so forecasts basically are management's plans and policies to achieve organizational goals. It's trying to figure out what type of product to produce, what do you price it at, how much advertising do you need, credit and inventory policies, etc. So these are some of the basic ideas behind. I think that's really interesting. Why do you waste time preparing a forecast? Really planning basically makes everyone aware of the corporate strategy and mission. And by the way, we'll talk about this in a second as well. But it basically allows the company to plan for short-term financing. Okay, if you feel like it needs short-term financing, this is a really good way to kind of keep track of plans and to coordinate, right? To make sure that it's a forced level of communication about where you want to be. It also helps you measure, right? It helps you compare budget to actual. It helps you make sure that everyone's on the same page from a goal perspective. Next, the way that you approach this is typically basing it off the profits that you ideally want to have. Think of this as estimating future events based on management plans. You could use historical accounting information, but that's generally only an indicator of what the future may be like, right? No one really knows the future. So I would start with the accounting, make necessary adjustments, and then look at the results later to revise plans if it's unsatisfactory. For example, if you're reading case and there's a forecast that's made and it's used, earlier in the year, and you kind of get to like May or June, and you don't think that they're going to make it. You don't think that they're anywhere near the forecast that they initially set up, or it's the opposite. They've made these adjustments and they think that they're going to have $1 million worth of sales, but they've already reached $900,000 by May. You may want to adjust. So the whole idea behind forecasting is you'd want to adjust whenever necessary, as soon as you have better information to work with. So someone's asking a quick question here. What is the difference between forecasting and budgeting? Okay, so forecasting basically implies that you're going generally into the future, where budgeting implies that you're trying to stick with 1 year. So forecasting can be like a multi-year analysis. Budgeting is typically done for 1 year. They generally mean kind of the same thing, really. But to me, the definition between those two words would imply the length of time that's associated between them. So forecasting is more of a long-term thing. Budgeting is usually like a 1 year thing, and then you compare it to actual, right? That's the whole idea behind budget to actual. Okay. The sales forecast usually drives the model. In order for you to have a proper forecast, you want to have pro forma financial statements, right? So that would summarize different outputs, different projections, etc. This would also explain things like the asset requirements, the investment needed to actually support the sales growth. It'd also look at financial requirements, your debt and dividend policies, and then it would look at things like the plug. Okay, basically, the plug is sort of an industry term, right? But the plug really looks at the designated source of external financing. Like, where do you get the funds to support this? Last but not least, if you're reading a case and if you're really struggling with trying to understand what you're supposed to do as part of the case, look at your basic economic assumptions. So sometimes they might be very clear about where they want to be and where they want to go, and sometimes they won't necessarily be extremely comfortable. So look and try to analyze as part of the case. Look at the assumptions that were used as part of your client, as part of your client's forecast to decide, okay? Okay. Next is a variance analysis. I think it's really important to do this. So that, the way that you would begin, honestly, is by being very open with what you intend to get out of this. So the first thing is you would want to prepare a standard cost performance report. And that's a fancy way of saying compare two different numbers. Okay? At that point, you would want to analyze the variances. You'd want to identify questions that you want to ask yourself. Then you'd want to receive explanations and take corrective actions wherever necessary. Okay? Now, it's up to you to really, understand how you would take this further and whether you would conduct next year's operations or not immediately. But the variance analysis cycle doesn't mean that you just collect the variances and just sit on them and don't do anything with them. The variance analysis implies that you should be questioning something. Now, what does this really remind you of? What does this cycle remind you of? The fact that they have to receive explanations, take corrective actions to document things. What does this remind you of? Let me know. I'd like to kind of get your perspective. What does this cycle remind you of? What's really critical here? What does this remind you of? Just want to get a feel for this. Well, I'll tell you what this personally reminds me of. I think the way, when I see something like this, I see the idea being like almost like audit procedures, right? So once you identify, variances, then you have to follow up with the client to collect more evidence and then see if the evidence is plausible, and then obtaining things. And some other answers that people provided are like performance measures, strategy, explanations, etc. I almost find this process to be very similar to audit, right? Where you're just trying to kind of gather more information, right? And then Michelle adds issue analysis and recommendation. Yeah, I certainly do agree. There was a question earlier, by the way, that I just want to quickly mention here. How would they use pro forma statements as part of the case? I mean, generally they won't. Pro forma statements implies that this is a lot of information. They might not. I'm just using it for completeness purposes here. Next, the third topic that I think that you should be very comfortable with is profitability management. So profitability management is pretty simple. Managing the profit and optimizing things to meet these strategic objectives. So this is something that I think is very common sense. This is when people get into the trap of believing that strategy and governance is all about getting more profit and meeting more objectives, right? And, that's when things become kind of obvious. You want a company to survive, you want it to have more profit. But it might be a little bit more complex than this, and I'll get to that in a second. But for example, in some cases, the right approach to achieving a company's long-term vision might be sacrificing margin for now, or trying to build up a customer base in order for you to do better in the future. Profitability management provides a better balance between trade-offs of revenue and market share objectives and your profit goals. Okay, within the essential business constraints. So within your, operating world, basically. You can perform a sensitivity analysis. Basically, it's the study of how uncertainty in the output of mathematical models or systems can be apportioned to different sources of uncertainty or its inputs. So for example, you might be able to create a financial model that will value a company's equity, right? The dependent variable, like for example, like your stock. Okay. Given the amount of earnings per share, an independent variable, right? Which is dependent on, basically the market rate. The company's reports at the end of the year and the company's PE multiple, another independent variable. And then you can somehow predict using a table price to earnings multiples and a corresponding value to the company's equity based on these different values of independent variables. Okay, so you kind of what the concept of a sensitivity analysis really means is that you're using models to determine the influence of specific factors on your overall forecast. Getting a quick question here, and it's a very interesting question, and the question basically reads, what is the difference between optimizing and maximizing? Interesting. To me, it actually means the same thing. Within the same context, it would mean the same thing. So a few other things that I want to cover today as part of management accounting, and by the way, this is just, management accounting. We're going to jump into other sections in a second. But as part of your MA area, you want to think about responsibility centers. So one of the key things for you to really kind of watch out for is making sure that all employees that you're working with are functioning and being evaluated based on the right context. So responsibility centers in my mind are organizational units that keep track of behavior and keep track of scope. And there's a few ways of looking at things, basically the cost center, the revenue center, investment center, etc. All you're essentially doing is you're rewarding a person based on how well they manage costs, how well they control revenue, profit, etc. Tying in a portion of the person's compensation to the investment centers or the revenue centers or the cost centers or the responsibilities directly will produce a better result going forward. That's kind of the whole idea, right? So the investment centers are typically the CEO, right? The profit centers is sort of like, kind of divisional managers. And then anyone that's in control of, say, an individual kind of discussions, basically would be a, cost center here. Okay, a few other things here. Individual performance management process. We should be setting goals, corporate strategies on a very defined basis across the entire company. The goal of the performance management process is to monitor and to coach people on their individual performance with formal documentation. If you reward people based on direct elements, if they meet or exceed, then a reward should be provided. And if it's not, then you should try to create some sort of a plan to develop this, right? And I think that that's really critical here. Okay, you want to look at a few other things. The key to effective incentive programs from, the actual performance period to thresholds, to employee participation, to sharing of profits, etc. Try to design compensation packages that would be, essential to motivate both short-term behavior and to provide motivation over time. And really, to sum it all up, the balanced scorecard is often an approach. And by the way, I do see a question here that someone is asking, is PM elective cases same as Core 2 cases? And they're not, but the subject matter is pretty similar. And I would say PM cases are, you're more likely to see anything that might be related to balanced scorecard a lot more. And really, the balanced scorecard is a planning and management system used extensively pretty much everywhere. It basically aligns the business goals along with the vision and strategy of the organization, improving internal and external communications, monitoring or organizational performance, and it's all about adding non-performance measures to traditional financial metrics to provide managers a more balanced view going forward. Okay, so it's not just the compensation thing. It's also the ability to actually keep track of information. Okay, so now we're going to get into another, I guess, portion here. What I want to do is quickly jump into financial accounting, and then we're going to jump into strategy and governance, and then we'll do a little bit of finance, and we'll wrap it up for the evening. Any questions on management accounting so far? Any questions here? I just want to make sure that there's no questions before we move on to financial accounting. I know we focused a lot here, so I just kind of want to get a feel for it. Okay. All right, so it doesn't look like there's a lot. So what I want to do now is kind of quickly brush through financial reporting. Now, please note that financial reporting is not really that critical as part of the process, right? So FR is not something that's important as part of this. Actually, here, I'm getting a quick question here. Can you talk about transfer pricing? Sure. It's actually not part of my slides. Transfer pricing is a process by which you transfer information. So it's more of an information process to document and allocate costs to certain parts of the process. It is not meant, okay? It is not meant to be a formal process. Transfer pricing, in my experience, is not something that's easy to explain, but it basically just means allocating prices directly to the individual components as part of the overall process. So I would say it's pretty hard to keep track of this stuff. So I would say, I would kind of keep it to that. Okay. All right, so let's quickly go through financial accounting before we move on to other areas. So technically speaking, FR plays a pretty small role, but I just kind of want you to understand it. From a revenue recognition context, we're always looking at whether it's recognizing revenue for goods or services. And by the way, revenue recognition does apply to management accounting because ultimately when you build a product or inventory that you found, you then want to sell it. That's where it plays in, a huge role as part of your process. So performance is achieved ultimately when collection is reasonably assured and you're looking for risks and rewards. There's no significant involvement. There's no measurement. There's no uncertainty regarding measurement, right? And the extent of returns. You may have persuasive evidence of an arrangement. So like a contract, the delivery has occurred or services kind of have been rendered, There's basically nothing that's outstanding. And the seller's price is also fixed, right? So you know exactly what the price is at that point. Okay. IFRS is pretty similar. Feel free to check out the slide to kind of see how, a little bit more from a goods perspective. From a service perspective, there's two ways to account for this. One would be using the percentage of completion method or the completed contract method under ASPE. And then the other would be strictly, IFRS does not allow the usage of the completed contract method. And you would have to use the percentage of completion method. Basically, revenue is only recognized to the percent complete. And assuming that you can't determine the outcome, revenue would be recognized only to the extent that the expenses which are recognized are recoverable. And if there's one specific act that you really care about more, then you have to alter your recognition to reflect that act. At that point, it's really important to keep track of this. Okay, then we move on into goodwill. You might see some goodwill. You might see some intangibles, non-monetary assets without any physical substance that meet the criteria of being able to separate. Can you sell it? Can you rent it? Can you license it? Does it arise from contractual obligations? Can you control it? And does it provide you with future economic benefit? Can you earn cash flow using it, right? At that point, that would meet the definition. You would want to decide under 3064 whether you'd want to expense or capitalize the cost of an intangible, but only if you can meet the following policy for R&D. You can only demonstrate. You can only capitalize if you demonstrate technical feasibility, intention to complete, the ability to use or sell, how the intangible asset will generate probable future economic benefits, the availability of adequate resources, and the ability to measure the expenses. Okay. Under ASPE, you have a choice to either expense or capitalize development. Under IFRS, you must capitalize development. Property, plant, and equipment, what can be included in the cost of a capital asset? And this is something that we talked about earlier from a management accounting context. It could be an inventory context too. But basically, we would want to include the purchase price and any other costs, such as brokers' commissions, installation, architectural design, engineering, legal, right? So some of these are fixed costs. For a basket purchase, when you're buying more than one asset, you have to allocate based on the relative fair value at the time of acquisition. And for any assets constructed over time, this would include direct materials and labor. Overhead is directly attributable to construction and carrying costs. Okay. If you have any upgrades to PP&E under 3061, costs incurred to enhance the service potential would be a betterment, and then is capitalized. And you really want to watch out for whether something would, greatly reduce like the cost of future maintenance, increase potentially the physical output or service capacity, lower the operating costs, or improve the quality of something. Okay, IFRS is much more descriptive and talks about it a little bit more, but in general, it's pretty similar with the application. For the valuation method, you'd want to use cost for ASPE, and there's a choice under IFRS for a choice between cost versus the revaluation model, which is the fair value less the accumulated depreciation minus impairment losses, which basically allows you to write up the value of something. Inventory, which I talked about a lot before. So what can be included as part of inventory? It's all costs incurred to bring inventory to the present location and condition. This includes direct costs, right? Your labor, your materials, variable overhead, fixed overhead, right? And you must allocate that overhead, right? So you must allocate, right? Remember how I said that you must be able to determine whether it's kind of directly attributable, right? You really, especially under fixed costs, you want to be able to measure this. You want to be able to figure out. And ASPE also provides us with the ability to include, possibly at your discretion, a choice, the borrowing costs. By the way, borrowing costs just mean, let's say that you took out a line of credit to buy inventory. Well, you can include the interest costs from your line of credit, from your loan. That's what borrowing costs are. You can add them to your inventory balance, but it's a choice, okay? And then IFRS says it's not a choice. You have to include those inventory interest costs. Okay, I'm getting a follow-up question earlier. How do you determine the outsourcing or production? I think that this is a little bit outside of the scope of this specific session, but again, feel free to contact me at the end of the session, and I'm happy to help you out. And I might be able to find a question for you. If you're interested in specifically practicing something like this, like transfer pricing, feel free to reach out to me, okay? But yeah, as I mentioned, we don't really have the time to cover everything, but I'd be happy to help out at the end of the session, okay? So kindly reach out and I'll do my best. Okay, what's not to include? Abnormal waste, okay? Storage costs, unless they're necessary as part of the process, right? So again, look at the attribution. Administrative overhead that don't contribute to bringing inventories to their present location and condition, and selling costs, right? So for anyone that was asking me earlier about selling costs and whether you believe that you should be including it or not, ASPE says that you're not supposed to include selling costs. But ASPE is not the same thing as management accounting, right? So for management accounting purposes, you want to look for directly attributable or not. For ASPE, there's just a separate kind of, set of rules. And ASPE says you cannot include selling costs. Okay, you must use FIFO or weighted average. You can't use LIFO. Leases. You want to look at whether something is operating or capital in nature, whether there's reasonable assurance of ownership transfer, a lease term of 75% or more is one of the signs. Present value of a minimum lease payments is 90% or more of the fair value of the property itself. Again, another test. All you need is one of these. We'd also want to look at a few other things like the discount rate being set the right way, the lower of the incremental borrowing rate and the rate implicit within the lease. Okay, look at the minimum lease payments, etc. If we do believe that it is a capital lease, then we record as an asset and obligation, right? And then amortize it over the lease term, and then any initial direct costs are expensed. Under IFRS, they're added to the asset. And under an operating lease, it's the same under both. They would just be expensed under lease payments. Now, from a management accounting context, the difference between capital and operating doesn't really apply. What really matters is the actual agreement. So, for example, the actual agreement might be operating in nature where you're leasing something. So ASPE might say, well, no. I know the contract says $500 a month, but it's technically a capital lease and they have to record the asset. Well, you don't have to record the asset for management accounting purposes, so it would remain with the substance of the agreement that was in place before, right? So it would continue to be the same $500 a month under management accounting. So that you might see a difference in the accounting under, say something like ASPE versus like a management accounting discussion. Okay. From a lessor context, you could have a sales type lease or a direct financing lease. Direct financing is much more common from a capital lease perspective. It's basically you using interest as the way that you generate profit from lending money. And the sales type lease implies that there's some sort of a profit portion. Lease inducements, typically included as part of your management accounting calculation. Inducements are recognized as an offset to rent expense evenly over the period. That's something that's generally required. There are some complications here. I don't really want to get into them. It's not really that critical for your Core 2 exam. If you want to read a little bit more, I've put in a lot more stuff here. Okay. Any questions on financial reporting before we move on to strategy and governance, which is probably my favorite section for this exam, and I would say something that I think a lot of people are generally uncomfortable with. Any questions here so far? Okay. All right. So remember when I said earlier that most people don't really follow the exam structure properly and they kind of ignore strategy and governance? That's my number one problem as a marker. That's what I see the most of. I see a lot of people that just skip the process when it comes down to strategy and governance, and they don't study this section. So what I wanted to cover is specifically what should you look at? What should you focus on to help you understand this section better? So let me explain strategy to you, okay? And I'll tell you everything that you really need to know as part of strategy, and then we'll, of course, talk about governance as well. But basically, strategy is an integrated and coordinated set of commitments and actions designed to exploit core competencies and hopefully gain some sort of a competitive advantage. Okay, so it's a way that you are doing something to gain a competitive advantage. Now, in general, what is a competitive advantage? It's some sort of a strategy that competitors can't duplicate or can't imitate. Okay, so you can do better than someone else, right? Can someone give me an example of a company that's implementing a competitive advantage that people can't replicate? So give me an example of a company and then their competitive advantage. Okay, give me an example of a company and their respective competitive advantage, for, seemingly in your mind. How do you understand this section? Lisa asks a very good question. Aha. Okay. So beautiful. Perfect. So thank you for providing this. I mean, I was expecting a lot of. I was expecting these big brands to come up. What's interesting to me is the definition of a competitive, a competitive, like advantage. Like, for example, with a product like Coca-Cola, they might have a bunch of competitors. Coca-Cola might have Pepsi as their competitive advantage. They might have Pepsi as their competitor. So the question is, what specifically is their competitive advantage? Is it the market share directly that they're, or is it their ingredients? Some people are saying Apple and Boeing and these giant companies. But for example, like Apple technology is not necessarily always the most advanced. So what specifically is their competitive advantage, right? Anyway, so the whole idea is, try to implement some kind of a strategy that other people can't really duplicate, right? It's pretty simple to understand conceptually, but that's really the base of strategy and governance. And now we're going to use that base going forward. Okay, now I'm going to just kind of walk through how to do it. By the way, Lisa asked a question earlier. The question was basically like, will I see a section on the exam that will read something like, oh, do the strategy and governance, or is it more integrated into the case itself? And in my opinion, it's almost always integrated and almost never a separate section. But however, there's always a ton of marks for you to be able to identify and discuss, which is why I want to bring this up, right here. So the strategic competitiveness is basically achieved when a firm successfully formulates and then implements the value-creating strategy. When they figured out something that can't be done. And the purpose of why you do this, okay, really the simple purpose of why you do this is you want above average returns, okay? So the reason why you set up a good strategy and a competitive advantage is hopefully you want above average returns, right? Compared to other investments with a similar risk. That's all it really kind of, stands for here. That's all we are really doing, right? Everything comes down to above average returns. So if you understand that, if you understand that first slide, now I'm going to get a little bit more complex. So as we mentioned earlier, and by the way, this is your management accounting stuff popping in, again, there are different internal resources for you to use, whether it's physical resources like materials or whether it's human labor, right, or organizational capital, okay? Capability is the capacity for a set of resources to perform a task in an integrative manner. So you take a little bit of like direct materials, add a little bit of labor to it, etc., right? So that's your capability. The core competency is a firm's resources and capabilities that serve as the source of the competitive advantage. Basically, it's like your magic formula for Coca-Cola, okay? So all we're doing is we're doing a little bit of physical, recipe, a lot on the human side, and maybe a little bit on the organizational capital. You know what I mean? So a strategy is always built up of these three things. Now, one way to remember this, if any of you are, I guess, fans of Vietnamese food. It's pho, P-H-O, pho, physical, human, organizational capital. As soon as I say this, you're never going to forget this. I apologize. But basically, A comes down to pho, physical, human, organizational capital as part of your strategic objectives. So once you understand kind of the whole idea of the basic definition of strategy, now you're supposed to see how it all ties into like a company context. Okay. So yeah, we talked about like the core competency. Everyone sort of understands it now. I think, thank you for your examples. I think you've given me really good examples. Now what we want to look at is how do we now bring this into a different light, like a different context. So here's your vision and mission statement. So the vision and mission statement basically provides the firm a strong identity. Okay. It kind of looks at a high level, what are you supposed to do, right? So what is the identity? What is a roadmap? What type of a company do you want to be going forward, right? And I think that that's really critical. The mission statement often discusses who you are today, okay? It looks at, the business makeup, the context. It focuses on where you're at today, the current customer, etc. The vision looks at the future. It's 3 to 5 years. What kind of company do you want to be? And here's sort of where you want to tie more about the idea behind the competitiveness, right? And where you want to be and what is that perfect faux combination going forward. So why is it important to develop vision and mission? Well, it provides a clear long-term direction for the organization. It also guides employee actions and gives them and the organization a sense of purpose, and it guides managerial decision-making. Okay, so it basically helps to keep everything kind of in line. Now, performance measures, and by the way, a lot of you, if you're not watching this from a Core 2 context, if you're watching this, say, from a performance management elective context, performance measures are an organization's way of measuring, right? Keeping track. Think like almost like a set of metrics, right? Evaluation metrics to determine whether someone is doing their job or not. And the way that you would want to measure this is using one of 4 ratio types: profitability, i.e. EPS, right? Earnings per share; liquidity, right? Coverage of short-term liabilities like current ratio; leverage, debt to equity; activity ratios, right? Inventory turnover. It's up to you to kind of really measure this. The environmental analysis is similar to like a sensitivity analysis, but in a different context. It's almost like looking at your overall industry, deciding where you fit, deciding where you might be compared to other people. Analyzing your competitors directly will really help you understand the process more. You can use a specific tool like Porter's 5 forces. If the forces are strong, and I'll talk about this in a second. Basically, you're looking at a number of different forces: the threat of new entrants, the bargaining power of your suppliers, the buyers, the threat of substitute products. Is it easier? Like, is it hard? The intensity of rivalry amongst your competitors, etc. All we're really looking for is strong forces mean lower profit potential. Weak forces mean higher profit potential. And your competitor intelligence allows you to compete in the business world better by providing you with more information and more objectives and strategies for you to implement. So these are like your triggers going forward. Now, environmental scans and your analysis could also be done in a very poor way. Like, for example, there could be other contexts, and other ways to kind of discuss things that may not necessarily be the most honest and the most, reasonable ways of doing this, okay? So what you want to look at, for example, is using only public information, okay? If you're reading as part of a case context, someone's using external information that should not be, consulted on, you'd want to discuss that, you'd want to assess. You also want to watch out for things like unethical approaches or something along those lines, because that would be bad. Next, and by the way, this is going to be something that's really interesting going forward, and I think will be really kind of a neat way of looking at future businesses. Okay, the way that you position your competitive advantage often, okay, the way that you position your competitive advantage is by trying to understand where you're at specifically and what kind of a product do you run. Okay, there's two different types of competitive advantages, generally speaking, and it really falls down into two different types and possible. The first one is being a lower cost alternative. Okay, so what if you're strictly a way lower cost provider? Okay. The other is distinctive. So you're not necessarily cheaper than other people, but it is certainly something that's more distinctive, more different. Okay? So those are the main types of competitive advantages, the way that we've talked about it kind of, earlier, previously before this. Okay? We then want to look at things like competitive strategies. You can have competitive behavior, offensive, defensive, etc., competitive action, basically tactical actions that people, or basically steps that people take to build or defend competitive advantages or to improve the market position. There could be a response, like a counter effect, right? So similar to like an action, but it's almost like, the opposite reaction. So, and then, basically rivalry. So if you were to add up everything together, basically what would be some of the main tactical kind of points? You also want to watch out for a few other things. Basically, you want to look at first mover incentives. So when a firm takes the initial competitive action to build or defend, right, it might have the opportunity to temporarily and possibly longer, keep and improve on the market position. Then you could be a second mover, which has a better, typically a better approach with lower costs, with the ability to direct resources in a better way. And late movers typically are those that focus directly on price optimization and a more feature focus. Okay, I think that's really important. Next, another definition that I want you to understand is quality. Okay, quality is the customer perception that the firm's goods or services perform in ways that are important to those customers. Okay, so again, it's from a customer context. I think that's really critical. There's a few other dynamics for you to watch out for: slow, fast, standard market cycles, which basically means how often do you have to update your products, etc. The other thing that I now want to explain is, now that we understand everything that we need to know from a strategy, from a strategy context, right? Many of you might know that at this point, strategy implies that it's all about the competitive advantage, right? So we are strictly saying to ourselves, everything as part of strategy is the competitive advantage. Well, let's take it a step further. Okay, let's take it to another level. Now, governance are the internal controls or processes that manage the strategy to help enforce it. So basically, it's a set of mechanisms and controls that make sure that your competitive advantage sticks around. If you are Apple, if you're Boeing, if you're Coca-Cola, corporate governance allows you to remain the leader. It's as simple as that. The primary objectives include the alignment of interests of managers and shareholders, right? Managers might want to get a short-term profit incentive. Shareholders want to hold the stock for, infinity, right? Make decisions that maximize company value and owner wealth. Attempt to achieve and maintain a competitive advantage at all costs. And this is kind of really important. This brings the idea behind the owner-manager relationship. When typically there's one or more person, say the owner hiring another person like a manager for the decision-making process, and shareholders often lack controls, may have different goals, so you implement governance mechanisms to bring things and to kind of keep things more effective, right? Like more aligned. So how do you discourage this idea of the short-term profit incentives? One of the ways that you would want to, discourage this behavior, and one of the main tools, is the board of directors. Now, many of you might know what a board of directors kind of is conceptually, but I don't think that a lot of you maybe, have had experience, say, being on a board. So I'll just kind of walk through some basic ideas behind what you need to know. Okay? The board of directors is a group of shareholder elected people. Okay? Their role is to act in the best interests of the company. And they're supposed to formally monitor and control the managers. Basically, the managers being like the CEOs and the CFOs, etc. So an effective and well-structured board of directors can influence the performance of a firm. They are responsible for overseeing managers to make sure that the company is still operating in ways that maximize shareholder wealth, right? I think that that's really critical at this point. So in other words, an effective board means let me just explain what well-structured means. Look at the basic definition and, say, background of the board, okay? If you look at, the board and no one on the board is like an accountant, and, they are charged with governance basically, and they're there to protect the interests of the shareholder, and yet they know nothing about how to protect the interests of the shareholder because they have no formal education. Well, maybe that's not a well-structured board, right? So think of it in that context, right? They have to be able to understand what they're trying to influence. They have to be able to actually help. So I think that that's really critical. There's also 3 different types of board members possible. These might seem pretty obvious to you, but one of them is like an insider. So it's a top-level manager within the corporation. It could be a related outsider. So basically someone who has partial relationship with the individual like company, but not involved with day-to-day operations, right? So an insider might be like a CEO. A related outsider might be a CEO of a different company, but someone who you might do business with, like a supplier. And then an outsider is someone who's completely independent, completely external. So something for you to kind of, think about. Okay. How do you increase the effectiveness of boards? Well, again, look at the credentials, right? Look at the backgrounds. Make sure that there's a sufficient process with how you evaluate not just management, but also the board performance. And, one of the key mechanisms behind the board is to figure out some sort of a compensation package that seeks to align the top, the interest of top managers and owners through not just salaries, which are short-term, but also long-term incentive plans like stock awards and stock options, etc. That would be the key for success going forward. Okay, the role of top-level managers would be composed of key individuals. These are people that are responsible for the entire organization. I think they're really critical. They would be required to understand the external stakeholder groups and understand where they are. Also, from a hiring context, by the way, we're getting kind of close to the end of strategy and governance here. But from a managerial succession context, you want to look at things like, do you hire internally versus externally, provide benefits and cons of why you'd want to do one or the other. These are all potential controls. Okay. Generally, you want to hire people who fit the organization and that are supportive of the strategy, because those are the people that are generally responsible for your overall operations, right? I think that that's really critical, right? And I think that that's really important from that context. I do think that that's something that's that would be required. Right. So I think that's important. And also, last but not least, you kind of want to understand that you must enforce ethical practices, must match culture to strategy. I think that's really critical, and try to shape all internal kind of decision-making processes going forward. Okay? A good leader will communicate and discuss ethical goals, divide and implement policies, use rewards, and recognize ethical behavior, create the appropriate environment, and provide ethical, incentives to remain ethical as part of a workplace, which comes down to reward systems, which probably is the single most powerful tool for winning the commitment of employees. Reward them, pay them better, produce the same level of incentives. I think that's critical. Okay. Okay. Yeah, I think we covered this. Basically, you have to pay people enough to kind of fit this. Any questions before we move on to finance? I know we've been kind of walking through, I know we've been kind of fighting through a lot of stuff. The finance section is by far the smallest. Okay, so in my experience, it's by far the smallest. Okay, alrighty. So I think it's really important to kind of talk about a few things, and I'll just kind of quickly skim this because we don't really have a ton of time left for tonight. But basically, finance is not really a giant section as part of this, this exam. Management accounting, strategy and governance, and I would say I would say those two sections are probably 80% of the exam, and then finance appears in kind of calculation related type areas, and because of that would be used as part of the assessment process itself. Okay, so there's a few things for you to consider. First of all, you want to look at capital budgeting as a concept. And this is the planning process to determine whether an organization's long-term investments are worth funding, right? It's like, how do you allocate resources for major capital investment decisions, etc. So you might want to do this by estimating cash flows, right? So look at cash in versus cash out on an after-tax basis. Look at relevant costs and benefits, right? Cash flow is ultimately the best way to do this. And you want to divide up the cash flow into 3 individual types: the original investment, the operating cash flow, and then the ending cash flow. Okay. Net present value is another factor. So when you're looking at cash flow, net present value is the difference between the present value of cash inflows and cash outflows. Basically, the investments which provide a positive net present value should be proceeded with. Okay. I think that's really important. Okay, so that's a concept here that kind of walks through this. IRR, right? Internal rate of return is the present value of all cash flows, at which point when the investment breaks even. Okay, so the higher that a project's IRR, the more desirable that it is for you to undertake that project. So I think that's really important. Okay, and that's another example. Basically, we mean that it would be a net present value of 0 under that context. The payback period is the time that it takes for you to invest into an asset by repaying the net cash outflow generated by that asset. It's basically the most simple way to associate risk with a proposed project. The payback period is expressed in years and possibly like fractions of years. I think that's really easy to remember. Shorter is obviously more preferred, and it's often used as kind of like a quick and dirty way of calculating whether someone would want to, use that process. So if you're looking at two different projects, net present value versus payback, and you're looking at two different ways of kind of calculating and looking at things, what you may want to look at, for example, is kind of the overall context of the cash distribution. Okay, so something that might have a better NPV might not be desirable or as desirable, assuming that the NPV is similar. Okay, so for example, what if all the cash happens in like the 4th year, like this in Project A, compared to Project B, which provides you with a lot more cash up front, right? So just because you have an NPV factor and payback, right? Payback often provides you with a quicker risk assessment compared to NPV alone. Okay, the further out that you go, the more uncertainty that you might face going forward. That's really something for you to kind of keep in mind when you're calculating this. Okay, any questions up until this point? Just want to make sure that there's no questions at all, that no one has any questions at this point. Okay, sorry, hang on a sec, folks. I apologize. My screen just froze. Okay, yeah, it looks like we're back in business. Great. Okay, so again, if you're looking at kind of the ranking of IRR versus NPV, then minimum rate of return might be different depending on the context. And you again want to assess which one is more reasonable, right, to use. There's other things which you should look at. Profitability ratios appear a lot on the exams. You'd want to look at some of the more common ones. Please try to memorize these. I think it's really important to know this. These gross profit margins, I think, are really important, where you're allocating production costs to manage, the actual margins of your products. Operating profit margins, where you're looking at the ability to control overhead or other operating costs. I think that those are pretty common. Return on capital employed, I think, is really common as well. Basically, a walkthrough of the returns made on resources before making any distribution of the returns themselves. Okay, those are also really critical as part of your assessment process. Okay, ratios just basically provide you with a quick way of analyzing where you're at. There could be efficiency ratios, looking at sales or profit divided by fixed assets, where we're looking at fixed asset capacity, right? So, for example, a reduction in profit might indicate overcapacity, right, or poor performing, equipment. Stock turnover, right? Your cost of sales divided by average stock value. You can see how much money is tied up in your inventory. It might indicate a stock management issue. Liquidity ratios, right? Can you meet your obligations? Can you pay your debt? A ratio of less than 1 is probably probably not ideal, right? If you don't have enough cash to support your future obligations, you probably want to watch out. Your investors might look at a few things that are common for investors. For example, EPS, right? Earnings, profits, right? Distributed to ordinary shareholders, right? Divided by the number of outstanding shares, right? Provides us with overall profit based on each share that people invested in. Price to earnings, right? So basically, this is the valuation rate, PE rate, in accordance with the sector or market rate. And I think that that's basically it. So that's it, folks. It's 10 o'clock, and we're almost right on the dot. So I think that's basically perfect. Yeah, you've now seen the Core 2 review. None of this should be something that's new for you. If this was new, check out and try to highlight some of the bits and pieces that I've highlighted from here. I've pulled a lot of this content from some of our other presentations, and I tried to sort it in the frequency and kind of order of testing. Okay, I tried to pull together resources in ways that I think would be helpful for you going forward. If you've watched this presentation as a Prep Formula student, thank you. If you have not, if you just purchased the webinar, please check out prepformula.com for more information about our webinars. Our webinars are free for students as part of our programs, and you do have an option to work with us on some of your future modules on a one-to-one basis, and you can continue to use the largest CPA community in Canada by attending some of these webinars going forward. Please check out our 2017 and 2018 full package for more information under prepformula.com. Okay, if you have any additional questions, feel free to get in touch. Okay, I just want to say good luck on your exam. Okay, try not to stress about it. It's really not the end of the world. You know everything that you need to know. If you've done our practice material, you'll feel very, very comfortable. If you've done the cases, if you've done the multiple choice, there's not going to be much that they can throw at you that you will be stuck in, that you won't really know. You've done the work. At this point, just walk in there, try to review kind of a few things, a few more things this week and see how that goes for you. Okay, but I think you're ready. I think you're ready to roll. If you need anything, feel free to get in touch. Okay, this is my direct contact information. There is a new webinar listing already online, so if you want to check that out, that's great. And we are starting the process over again, and we'll be rolling for the December exams, and I hope to see all of you in October participating in some of our future webinars. Again, twice a week, starting next week, and we'll be going full steam ahead until December. So thank you again to all of you so much for attending tonight. Good luck on your exams, and best of luck. And if you need anything, feel free to reach out. Okay, have a great evening. Feel free to contact me if there's any follow-up questions here. Okay, great. Oh yeah, and sorry, one last thing. Please attempt the Core 2 mock exam case that I've uploaded. I think it's really good. I think you should try it. I think you should let me know, what your thoughts were, and I will definitely try to upload a few sample answers for you right away. Okay? All right. Okay. Take care, folks. Have a great night. Bye-bye.